All right, buckle up. This week has been an absolute whirlwind on Wall Street.
It really has.
Earnings reports flying in, major economic
Yeah.
shifts. It's impacting everything from, your iPhone to your energy bill.
Yeah.
We've been digging through the reports, trying to cut through the noise for you.
What's really fascinating, I think, is how these individual company stories, they really do connect to the bigger picture of the economy.
Definitely.
From, the biggest tech giants right through to the energy titans, we're seeing some really telling trends emerging.
Yeah, it gives you a real snapshot of the market dynamics, those underlying currents.
Exactly.
So we probably have to start with big tech, right? The stakes were just incredibly high for their earnings.
Absolutely. And the outcomes were, well, quite different.
Very contrasting.
Hmm.
Let's kick off with Apple. Expectations were maybe a bit tempered going in.
They were, but Apple really impressed, surprised to the upside.
A lot of that strength seemed to come from iPhones, right? Strong sales there.
Yes, and even though Tim Cook mentioned the tariff purchases were, less than 10% of revenue?
Right, which maybe says something about their supply chain resilience.
Could be.
Yeah.
And what was also compelling was their performance in China.
Yeah, they did remarkably well there, sort of defying those earlier concerns about demand slowing down.
Mm-hmm. Which brings us to Amazon.
Amazon.
A different story.
Very different. They also faced really high expectations, partly because Microsoft had set such a fairly high bar for cloud revenue.
Okay.
But Amazon, unfortunately, disappointed a bit. Revenue was slightly better than expected, maybe?
Just slightly.
Yeah.
But the key was the operating income, right? What they actually made.
Exactly. That was significantly lower than Wall Street wanted to see.
And their comments around AI, future growth, it just didn't quite land with the market, it seems.
No, not as much as hoped. And the result, the stock initially dropped, 8% or so?
Yeah, 8 to 8.3%, down to around $215. That wiped off over $200 billion in market cap, just like that. That $200 billion, I mean, it's not just a number. It really reflects a big repricing of Amazon's future growth potential.
Investors are really scrutinizing those AI investments now.
They are. How will those big, costly bets actually translate into profits?
Mm-hmm.
Especially with cloud competition heating up.
And you heard Andy Jassy, the CEO, saying AI is still in very early days for them.
Right, and talking about lowering AI app costs to bring customers in. It's a clear sign they're still heavily in the investment phase.
And the market's impatient for those returns.
It seems so. Meanwhile, you had Microsoft hitting that incredible $4 trillion market cap.
Wow. Yeah, really cementing their position as a leader in AI spending and, crucially, showing they're converting it into cloud growth.
That's the key difference right now, isn't it?
It really seems to be. Okay, let's pivot from digital giants to traditional energy titans. Big oil.
Okay.
ExxonMobil, XOM, they definitely got a boost, up about 1.4% to $113.
Yeah, they beat earnings estimates.
Yeah.
Higher volume, higher output driving that.
And what was the magic word for investors?
The buybacks. Maintaining that $20 billion a year share buyback program.
That always helps.
It certainly resonates. And it raises an interesting question, even with oil prices fluctuating globally.
Right.
Strong operations and those consistent shareholder returns, like buybacks, they're clearly valued. It suggests maybe a certain resilience in traditional energy.
Resilience some might not have anticipated, perhaps?
Perhaps, especially with all the focus on energy security these days.
And Chevron, CVX, similar story.
Very similar. Adjusted EPS came in, bang in line with expectations.
And their guidance assumes oil around $70 a barrel, which seems, optimistic maybe, but that's their assumption.
That's the number they're working with, yeah.
Okay, moving on. Some surprising gators this week. Beyond the usual suspects, we have to talk Carvana, CVNA.
Oh, yeah, what a turnaround story.
A real hot stock.
Yeah.
Surged to an all-time high after reporting a six-fold jump in net income, record quarterly sales.
It's incredible. The stock is up, 10,000% from its low in 2022?
10,000%. It's just staggering. A complete reversal.
And think about the short sellers. A massive blow to them.
Ouch. How much did they lose?
The figure being thrown around is $7.42 billion since late 2022.
Wow. That really shows the power of a turnaround when a company executes, especially against low expectations.
Absolutely.
And it wasn't just Carvana lighting things up. First Solar, FSLR.
Right. They gained about 5.3%, boosted their full-year sales forecast.
And their CEO had that interesting comment about President Trump's tax and spending law.
Yeah, the one restricting tax credits for China-tied products. He said it puts them in a greater position of strength compared to the Biden climate law.
Because it drives demand for domestic panels.
That's the argument. It's a fascinating look at how policy, even tax law, can directly shape demand in specific industries.
A real domestic first push in energy tech, it seems.
Seems that way, with financial incentives really reshaping the landscape.
Then you had Reddit jumping almost 18%.
Yeah, 17.5%. Most profitable quarter, strong Q3 projections.
Looks like they're finally figuring out how to monetize eyeballs, as they say.
The ad business seems to be clicking for them.
But of course, it wasn't all good news while we had these impressive gainers.
Right, the market wasn't all green.
No. Some significant players saw notable declines. Coinbase, Coin, for instance.
Down quite a bit, 15, 17%.
Lower than expected Q2 revenue. They blamed slow spot trading volume globally.
And just general crypto market volatility, which always hits the exchanges.
It really does.
And this raises that point again, doesn't it? How much are these macro factors, crypto cycles, policy decisions driving things beyond just company performance?
We definitely saw that with Moderna, mRNA.
Down 7, 8%. Big drop in Q2 sales, 41%.
Lower COVID vaccine demand, obviously, as the pandemic fades. They even lowered their forecast for the year.
Recalibrating for that post-pandemic reality.
And then the European pharma sector saw, well, a lot of weakness. Novo Nordisk, GSK, AstraZeneca, Sanofi.
Yeah, that seemed directly linked to President Trump's demand about drug pricing.
The demand to cut U.S. prices to match what other countries pay with that 60-day threat.
Exactly. And Novo Nordisk got that double whammy you mentioned.
Right, the pricing pressure and that 39% tariff on Switzerland impacting them.
Tough headwinds for them.
Definitely. Okay, let's shift gears a bit. Beyond specific companies, let's look at the broader economic and policy stuff that was big this week, starting with AI.
AI was definitely front and center.
President Trump gave his first full-length policy speech on AI, declared the U.S. is in an AI race.
And laid out some pillars. Innovation by cutting red tape, big investments in energy and data centers for infrastructure.
Right, and pushing AI exports, wanting the U.S. tech stack to be the global standard.
So what does this really signal? It's a clear strategic direction, very domestic first.
And addressing those concerns around AI bias, too.
Yes, that was a major theme. There's a huge flashpoint in the tech world right now.
He talked about how we win, focusing on American workers, demanding government AI models be free of ideological bias, or no woke AI, as he put it.
And signed an executive order to that effect. Plus, a push to prevent tech misuse or theft.
Which leads right into that huge debate, AI copyright and user privacy.
A really tricky area.
President Trump outlined what he called a common sense approach, basically saying requiring AI to license every single article for training isn't feasible.
And that it would make the U.S. lose the AI race to countries like China.
His line seems to be, if AI copies or plagiarizes, that's a violation. But if it's just learning patterns like a human does, that's fair.
It's an attempt to draw a line between copying and transformative learning, let's call it.
A line that's going to be tested legally, for sure.
Oh, absolutely. It really highlights how existing laws, copyright, privacy, they're being fundamentally challenged by AI.
We urgently need new frameworks, don't we, to protect creators and users, but still allow progress.
It's a difficult balance, and you're already seeing the ripples, like that New York Times Amazon deal.
Yeah, $20 to $25 million a year for content licensing. Is that the peak or just the beginning of creators monetizing IP this way?
Good question. And separately, the privacy issue. Sam Altman's concern about ChatGPT.
Right, saying there's no legal confidentiality, comparing it to searchable browser history that can be subpoenaed.
Which is pretty concerning when you think about the potentially personal stuff people might share with AI.
Very true. Okay, let's quickly hit the latest economic data and those big trade developments.
We saw that amazing Q2 GDP growth, right? 3%.
Yeah, a huge turnaround from Q1's decline of 0.5%.
Though Fed Chair Powell sort of smoothed the data, looking at the first half overall.
True. But that strong Q2 number could certainly be seen to justify the Fed holding rates steady again.
For the fifth meeting in a row, although you had those two dissents.
Yeah, two Trump-nominated governors disagreeing. That's pretty rare. Signals some differing views inside the Fed.
It does. And it's fascinating to see that robust growth alongside a cautious Fed and then these very aggressive trade deals.
Speaking of trade, that new deal with the EU, that's huge.
Explain the key parts.
Okay, so zero tariffs on U.S. products going into the EU. But EU products face a 15% tariff coming into the U.S.
Interesting asymmetry there.
Plus, the EU committed to investing, what, $600 billion in the U.S.?
And buying $750 billion of U.S. energy, hundreds of billions in defense products, too.
It's being framed as a massive win for the U.S., part of that shock and bore playbook.
An aggressive strategy that seems to be bringing in, well, potentially trillions in stimulus without printing money.
Right, and generating an extra $300 billion a year in tariff revenue to help the budget.
If you connect all that, the growth, the cautious Fed, the trade deals,
Right.
it suggests a real strategy to boost the domestic economy via international agreements.
Even if it creates new inflation dynamics or trade tensions.
Potentially, yes.
So, quite a week. We've seen the big players, the surprising upsets, those major policy moves shaping things. It's a really dynamic time, isn't it?
It absolutely is.
Huh.
And maybe this raises an important question for you, the listener, to think about. As we watch all these major economic forces, the push for national interest in AI, these strategic trade deals, how do you think this will ultimately reshape the global business landscape over, say, the next few years?
That's a great question to ponder. Keep digging into these fascinating trends and what they mean.
There's certainly a lot to track.
We'll be back soon to unpack even more.